Today on the blockchain report, Bitcoin's holding above 118K and DC finally found the on button for crypto because the White House is expected to drop its first big crypto report today. Senator Lummis wants your Bitcoin counted in mortgage applications, and Joe Burnett from SMLR Scientific joins us because yes, even MedTech is stacking sats now. All this and more right now on today's show. Let's go! Good morning, my digital degens, Bitcoin believers, and everyone still waiting for the SEC to define sufficient decentralization like it's a lost scroll from the Library of Alexandria. I'm Hank Hudson coming to you live from San Francisco, where brunch costs more than your layer 2 bag. The scooters seem to multiply overnight, and you can get hit by a car with no driver, no insurance, and a better resume than yours. It's Wednesday. TradFi's pretending to understand Web3. Crypto acts is busy turning every chart into an existential crisis. And Bitcoin, well, Bitcoin's hanging around like it knows something that we don't, which to be fair, it probably does. Altcoins, on the other hand, are acting like they're in an open relationship with gravity. And now, before we dive into the regulatory roller coaster, the ETF hopium, and whatever Donald tweeted in all caps today, give that like button a gentle tap or an aggressive smash if your portfolio still hasn't recovered from DeFi summer, and follow RoxomTV and me at Hank at RoxomTV on whatever platform still lets us talk about Bitcoin without getting shadow banned, deplatformed, or offered a job at Ripple. Now, whether you're tuning in from your office, your metaverse condo, or your cousin's garage turned mining farm, welcome. Let's get weird today. But first, let's take a peek at how the markets are cooking in this morning's market rundown. Let's go. Alrighty, let's see how the numbers are treating us today. They're okay. Nothing really to talk about too much. Bitcoin hovering above 118K. Ethereum right beneath that $3,800 mark. XRP sitting around $3.13 a coin. Cardano seen a bit of a drawback as of late. They're over down to 77 cents. Hoskinson not too pleased about that. And Dogecoin doing what Dogecoin does, which is a lot of nothing, sitting at about 22 cents a pop. In TradFi, let's take a peek at how the numbers are looking there. Right now, the Dow Jones, not a lot of movement this morning, right around 44,500. The NASDAQ is up about 53 points this morning. The S&P is up a basically negligible 3 points. Not a lot happening on the whole. As far as individual stocks go, MicroStrategy, they're up almost $7.50, $8 this morning. Coinbase is up $10 themselves. That's about a 3% gain on the day. Tesla, they're down about a percentage point. Nvidia is up 1.5% this morning, and GameStop doing a whole lot of nothing, sitting around that $22.50 mark. We got a lot to cover today, so right now let's hit the stinger because we're joined by my good friend Luka Pagano, our resident chart shark and crypto wonderkid. Let's get him on here.
This is not financial advice.
Luka, how are you this morning, my friend? It's great to see you.
Hey Hank, how's it going? A pleasure to be here, so thank you for having me.
Oh, it's always our pleasure, and we got a big day ahead of us. We're expecting some crypto news out of Washington this afternoon. What are you seeing from the markets right now? Are they responding in any way whatsoever? It seems like a whole lot of nothing is going on currently, but that is always subject to change. What are the charts telling you today?
Yeah, I mean, I think this is very, very natural for when markets are what we call pretty much uncertain in that sense for what's following the following days, the next days, So in that sense, I mean, in the grand scheme of things, I'm seeing a pretty natural sideways like pullback thing in terms of a Bitcoin bull market, So as a quick recap, Hank, we have here on Bitcoin, we're seeing Bitcoin. We had this amazing bull flag, which was basically what started the next leg up for us to break all-time highs, This was the big resistance we had several several attempts to break the $110,000, and then we broke it. So that's awesome. And now, we broke a leg up, and we're trying for me to consolidate. I mean, I see this beautiful pullback as a bull flag again. I see this descending channel, which is pretty much clean in that sense. If we lower a little bit our time frame into 8-hour candles, we can definitely see this retracing. We have this midline which served as a support here. So what I believe can happen here is we either break here up. For me, this is definitely bullishness in place for now, or we can test the lower channel as well. For me, this is a great buy opportunity. Of course, not financial advice. Looking into, dissecting this pullback into new highs, ideally,
Yeah, so it's kind of hard to see on the screen right now, Luka, but what are you expecting to be our floor and our ceiling as of right now? I know we almost hit that 123 mark for all-time highs a couple of weeks ago.
Yeah.
The floor had been around 110 recently, but we've been doing a nice job kind of floating around 118. We saw that pullback after that Galaxy Digital dump last weekend, I should say, but we came right back to 118. So right now, what's our floor and what's the ceiling we should be taking a look at?
Beautiful. I mean, for me, the floor, we can see it as if we see a strong market. For me, we shouldn't go lower than $113,000 probably. So that's what I should be, what I would like to see as floor, because this is the bottom of the channel. That makes sense for me. In terms of upside, for me, of course, our immediate, let's say, resistance is for sure $120,000, because it's a round number. I love to talk about round numbers here, Hank. It's also coincidentally, or not so much, it's basically our last point of resistance in a daily chart. If we mark our $120,000, it's pretty obvious. We've got some resistance here. So if we break this, for me, next resistance honestly is $135,000 or so. That's what I'm seeing at least.
So what I've noticed as of late between Galaxy Digital and then Michael Saylor and Strategy recently made an enormous Bitcoin purchase that we're going to talk about a little later in the show. I think around 20,000 BTC in one foul swoop. Are you surprised we're not seeing more movement as a result of these large buy and sell orders? I mean, 80,000, we went down $3,000, came right back up. We just saw a 20,000 Bitcoin purchase, and it seems like the market's not really moving. Do you think that's a good sign? Are we really entering this new maturation phase of Bitcoin's journey, that it's not going to be affected by these, single large buy or sell orders?
I mean, that's a good question, because it's for me, it's more important the reaction of the market on the news itself than the reaction of the buy. Why do I say this? Because the buy, if we think of it in terms of market dynamics, Hank, I mean, that when we it's not that was a market buy, that they went to the market and, hey, let's buy 80,000 Bitcoins or whatever, So I think it's more of a, OTC trade or a trade that doesn't hit the books, let's say, right? So I don't think it should have an effect on the price itself, but what should have or may have an effect is the news of it, And I think the market is uncertain at this point with the leg up, and it's trying to digest the new upside, to be honest,
Yeah, and a big point of conversation recently is it seems like the altcoin season may have started, at least based on what we've seen as in the last month or so. I think XRP was up like 70%. We saw Ethereum finally wake up from the dead, and it's now around that 3,800 mark. What is the Bitcoin dominance compared to the altcoins looking like right now? And what is that telling you about where we are in this current cycle?
Yeah, I think you nailed it, because alts are doing great, Hank. I mean, Bitcoin dominance is for the first time in a lot of time, breaking down what was once resistance on the 62 to 63% of dominance, so that's great to see, honestly. Also, we see this 2 weeks ago, we see this big red candle as a weekly, which for me, and let's hope for those altcoin traders out there, it's a sign of exhaustion on the Bitcoin dominance for a while. I mean, for us, trying to for the bettors on altcoins, what you should want to see is us not climbing above 63%. For me, that's a very important level. That was the key resistance and triggering. If we just mark it on a red line here, or let's put it in blue to make it easier. I mean, it's a key resistance that was, this was the triggering of the downside on the altcoin season on 2021. We then scaled up, and now we're back at it again, fighting it. So if you're an altcoin trader, what I would say, or at least my view, is you would love to think this was a deviation, right, of that 63% level, and we should be waiting to go a little bit more down. So that's at least the bullish view on terms of the altcoin,
Yeah, absolutely. And it makes me wonder, a thing we're hearing a lot right now is that the 4-year cycle is dead. It's no longer a thing. We have Bitwise's CIO Matt Hogan has come out and said he doesn't expect us to follow this normal pattern of cycles that we have seen in the past. However, now that we are actually seeing what seems to be this altcoin hot girl summer we've all been waiting for, do you think that's in any way indicative that we're still following the same traditional cycle path that we've seen in the past? Or does that not have anything to do with that whatsoever?
I mean, honestly, that's a topic that is pretty hard to tell right now, because on the one side, what I think, Hank, is you have reasons to believe that maybe it will not be a 4-year cycle like marked as before, in terms of that the industry has evolved onto something else, where you have lots of institutions, you have companies that don't go with that cycle necessarily, that are operating in Bitcoin. So that, of course, will have some value to add in terms of the cycles itself on the Bitcoin ecosystem. I mean, what I believe on the last 2 years, particularly last year, is that Bitcoin has evolved further its Bitcoin ecosystem per se, so further crypto itself. So I think that will probably help a little bit on that cycle. But having said that, honestly, for me, cycles will always exist in terms of some bullish momentum and bearish momentum, because it's how the market behaves, it's how investors behave, and as I always love to talk, it's how us traders see the market. We're risk on sometimes, we're risk off, and that's psychology, and that's how the market works. I mean, NASDAQ has its cycles as well. Of course, it's not a 4-year cycle marked up. So that's why I say it may evolve into something else. For me, I believe that theory. And inside crypto itself, you will have, of course, some bullish momentum on Bitcoin and some bullish momentum on altcoins. I think timing that is very important. I think we may be seeing some rotation into altcoins definitely on the last few weeks,
And as we're seeing that rotation happen in real time, are you looking for anything specifically for what would potentially indicate the next leg up for Bitcoin? Do we need altcoins dominance to kind of decrease a little bit, Bitcoin get higher, or are we kind of waiting for that next big catalyst right now? Like today we have the big meeting in Washington where they're going to talk about crypto going forward. Are we waiting for something right now, or are we just kind of going through the natural cycles and waiting for this consolidation to run its course?
Yeah, I mean, to that point, what I believe honestly is in an altcoin season, let's say, or if rotations to altcoin keep on happening, it's not that Bitcoin won't work, or won't go up. I believe Bitcoin may break this may break this channel, which it will be for me a triggering into long in Bitcoin. But basically, if we do break this, I believe altcoins may go higher. That's what I think. I think we're at the timing on that things go high and other things go higher. Because there's another altcoin season which may occur when Bitcoin does nothing and altcoins just pop. I think that's much further into the cycle if there were to be a 4 year cycle. You know what I mean? For me, we're at the time, honestly, where things go up and other things go simply higher, or at least let's hope that continues, So in that sense, Hank, we got to see how today evolves for sure. But mostly, for me, the triggering that Bitcoin will keep on going higher than altcoins is that 63% sweet spot on Bitcoin dominance.
All right, so we'll be keeping our eye out for that, and certainly our finger on the pulse as we get more information out of DC as it's made available today. As always, Luka, thank you so much for your time this morning. Before we let you go, if our audience wants more excellent chart analysis from the one and only, where can they find you?
Yeah, I will be updating this chart for sure at Roxom these days.
Rock and roll. All right, Luka, always a pleasure. We thank you for joining in, and we'll see you soon, buddy.
Thank you very much, Hank. See you soon. Bye-bye.
Bye-bye. All right, gang, we're going to take a quick break, but when we're back, this morning's bull run, and make sure you're staying tuned this morning because we have a special guest. Joe Burnett from SMLR Scientific is going to be joining us, and we're going to be talking about Bitcoin treasury strategies and so much more. You won't want to miss it. Blockchain Report coming right back. Stay tuned.
Security matters. Xapo Bank. The only way to bank your Bitcoin. Apply now at xapobank.com.
Breaking news this morning. We mentioned that we were expecting the crypto report to come out of DC, and it looks like we've got some information trickling in. It says, as according on here at the Roxom website, always the RoxomTV Twitter page, X, whatever you want to call it, best place to get the most updated information in the world. It's saying that the Trump administration released the crypto report, but it omits any kind of details on the Bitcoin Strategic Reserve. You can even see by the photo there, even Donald himself looks disappointed or constipated. I can't really tell. Either way, we're not exactly happy about it. We're waiting to get some real rules and some guidance and, in places of what we'll be expecting for the supposed Bitcoin Strategic Reserve that we've heard so much about. Again, right now it only is supposedly including criminal forfeitures and seizures of that like. We have yet to hear anything about the United States actively buying and trying to acquire Bitcoin through other means, but we do have some people in the government that are looking for that very thing, and we're going to talk about it right now. So let's hit camera one because we're going to start this morning's bull run. Let's do it. All right, so we didn't hear the strategic Bitcoin reserve news we were hoping for this morning out of DC. However, Senator Luka is taking more Bitcoin to Washington anyway. There she is, she's the best. And she's pointing it straight at the mortgage market. She's introduced the 21st Century Mortgage Act. Now, this would legally require Fannie Mae and Freddie Mac to evaluate cryptocurrency as an asset in their mortgage risk assessments. Now, that means if you're holding Bitcoin, it could actually help you get a home loan. Now, in a statement, Lummis said the bill is about helping Americans build wealth in a modern way. She called it an innovative path to wealth building, especially for younger Americans who already hold digital assets. The bill would enshrine a recent directive from Federal Housing Finance Agency Director William Pulte, who told Fannie and Freddie to prepare a proposal for considering crypto as part of a single-family loan risk models. That's government speak for figure out how to count this stuff without freaking out. Lummis's bill would force them to include crypto that's recorded on a cryptographically secured distributed ledger, also known as, you guessed it, the blockchain. And more importantly, the legislation prohibits the forced conversion of crypto into dollars, because nothing says freedom quite like not being forced to sell your sats. But not everyone is thrilled. Senator Elizabeth Warren and Senator Bernie Sanders and other Democrats sent a letter to Pulte warning that including crypto and mortgage underwriting could pose a risk to the financial system. They're concerned that volatile assets could make the housing market even more unstable than it already is, which is fair. But also, the existing system hasn't exactly been crushing it on stability either. The debate's now officially on. Should your Bitcoin help you buy a house, or should it stay locked in a cold storage far away from anything involving the words Fannie, Freddie, or fixed rate? Time and Congress, I guess, will tell. And Anchorage Digital just bought over 10,000 Bitcoin in only 9 hours. There it is. That's $1.19 billion in BTC, not in a quarter, not over the course of a year, in 9 hours. They didn't ape in on Coinbase either. As a federally chartered digital asset bank, Anchorage used algorithmic trading and over-the-counter desks to spread the order out. But why did they do this, you ask? Well, because when you buy $1 billion of anything, you don't want to move the price so much that you end up buying it from yourself at the top. The purchase was tracked by blockchain analytics firm Luka on-chain. It's being viewed as a benchmark moment for institutional adoption, because this wasn't some rogue hedge fund manager chasing clout. This was a regulated financial institution treating Bitcoin like a strategic reserve asset, the kind of central banks usually keep in the form of, you guessed it, gold. Anchorage stashed the Bitcoin in cold storage and multi-sig wallets, which is code for we don't trust the internet. The scale of the purchase and how quietly it went down actually says a lot. It shows that Bitcoin's liquidity has matured, enough at least that someone can throw $1 billion at it and not break the charts. It also signals confidence, not in the usual number go up meme way, but in this is now a serious part of the financial system kind of way. It gives cover for other institutions to start allocating without needing to pretend they're doing it ironically. Of course, there are still some hurdles. Regulatory clarity is somewhere between murky and made up on the fly right now. Security risks certainly exist because hackers don't retire. And volatility still haunts Bitcoin like it's on a juice cleanse one day and eating 6 pizzas the next. Still, Anchorage's move aligns with the broader trend of Bitcoin ETF approvals and increasing institutional comfort with regulated crypto exposure. They're not just stacking sats, they're cementing their place in a rapidly evolving financial world. And whether or not you like it, $1.19 billion says they plan to be here for quite a while. And Strategy, well, they're back on their stuff as they just added over 21,000 BTC to their balance sheets. That brings their total Bitcoin treasury to 628,791 BTC. Can we actually bring up Bitcoin treasuries right now here, guys? I want to take a peek and see if it's been updated yet. So for those of you that are not already aware, this is the #1 place on the web to see what all of your favorite public companies are doing in regards to stacking Bitcoin on their balance sheet. So if you can see here, we got the leaderboard. Of course, at the top and by a pretty significant margin, we have Strategy that now has, again, around 628,000 Bitcoin, and it has been updated. And what's great about this website, if this is your first time, let's click on Strategy right here, guys. If you click on that, it's going to go to the individual page for Strategy where it gives you all of their information pertaining to their Bitcoin treasury, right? So let's take a peek as it loads here. They even have a video now. That is great. You guys are doing great stuff with this website. So let's scroll down a little. We got 628,791 Bitcoin currently in their vault at an average price of $73,277. For those of you that have joined us before in the past, you might remember that number was around 71,000 not too recently. But with this most recent buy at an average price point, I think it's set of around 118K or so, that number is going up. But Michael Saylor, he doesn't care. Why? Because right now, their profit loss is 61.33% on all of their Bitcoin buys that they've been up to since 2020. So it's safe to say, I think Michael Saylor is doing just fine. Another nice thing about this, if you scroll down, you can look at how their Bitcoin affects their stock and financials. So right now, their stock price is at $401.
Remember, this was at around like 30, I believe, when they started their Bitcoin treasury back in 2020. So I think their shareholders are probably okay with this move so far. The market cap for Strategy currently is 114 billion. Their enterprise value is 117 billion, and their Bitcoin makes up 65% of their overall market cap right now. So I think it's safe to say they are in for the long haul. So bitcointreasuries.net, make sure to bookmark it, best place on the web to see what those companies are up to with their Bitcoin. Let's return to camera one, por favor. Beautiful, thank you guys. There we go. So it seems like with this most recent accumulation, Strategy is out there trying to make nation state a corporate title, as they seem to own pretty much more than everybody, except I believe for BlackRock. Now, this most recent buy was funded by the largest U.S. IPO of 2025, a $2.5 billion raise through STRC, their fourth preferred stock product. The initial goal was a raise of $500 million. The final raise, 5 times that. Why? Because when you're printing shares like it's a game of Monopoly and converting them into Bitcoin, the market lets you. The purchase price averaged $117,000 per coin, making it their biggest buy since back in March. And no, they're not buying Bitcoin off of Cash App. They've used every financial instrument available. We're talking equity, debt, convertibles, all for one single purpose, and that is to buy more Bitcoin. This time, though, it was STRC, a NASDAQ-listed perpetual preferred stock with monthly dividends. Because who needs bonds when you can earn your income on your Saylor-backed SAT stack? Strategy's previous offerings include Strike STRK, a convertible with an 8% fixed dividend, Strife STRF, a non-convertible with 10% cumulative yield, and Stride STRD, a 10% non-cumulative payout model. Because apparently, every time you open a new brokerage account, Saylor has a new ticker just waiting for you. Shares of Strategy, MSTR, closed down 2.2% on Tuesday. After hours, they inched up a little bit, about a half a percentage point. Not exactly a moon mission, but when you're up 31.55% year to date, you can afford a little breather. Now, for some additional context, Strategy shares rose 358% in 2024 alone. So this year, they're basically slumming it by comparison. Their next earnings report actually drops this Thursday, and with $2.5 billion in fresh Bitcoin on the books, it's going to be a fun one, especially if you're an auditor who likes volatility with your spreadsheets. And in news of other people stacking sats, 21 Capital now holds 43,500 Bitcoin of their own, because apparently 42,000 just wasn't enough. The company, formed by Tether, Bitfinex, Cantor Fitzgerald, and SoftBank, picked up another 5,800 BTC from Tether. That brings their total stack to around $5.1 billion in digital coins. Let's bring up Bitcoin treasuries again here, guys. I want to see what 21 Capital's up to. Let's take a peek again. This is the #1 place to check these Bitcoin treasuries on the web from your favorite public companies. So let's take a look at 21 Capital. Right now, they're XXI, they're in 3rd place, and we can get all the information about what they're up to and how their Bitcoin treasury is looking. So if I click on this here, give me a little clicky, there we go. So their balance right now, just over 43,500. It doesn't provide information of their average cost right now. I'm not sure why that is, but I'll have to write a letter to the president of the company or something to figure that one out. Their average share price, $28.47, a market cap of $293 million, and their enterprise value of $346 million. I don't think they have factored in their Bitcoin holdings quite yet, but 21 Capital is a new player on the block, so I'm sure they're just getting the things worked out in the back end here of the website. But, bitcointreasuries.net, check it out. Let's get back to camera one, please. So the plan here for 21 Capital is actually quite simple. Launch as a public company, give traditional investors access to Bitcoin via shares, and casually become the 3rd largest corporate BTC holder. Right behind Strategy and Mara Holdings, of course, because if you're going to build a new financial system, you might as well start at the top of the leaderboard. CEO Jack Mallers says the company is just getting started, which is either really exciting or really terrifying, depending on how many Bitcoin you already own. In a bold, high-energy appearance on Bloomberg Crypto, Mallers made it clear the goal isn't to stay 3rd for much longer. He said, "I'm never going to sit up here and say that I want to be 2nd. And when your board includes Mallers, Tether, and SoftBank, That's a lot of capital, a lot of engineering muscle, and a whole lot of Bitcoin conviction. Now, 21 Capital is going public through a SPAC merger with Cantor Equity Partners, which currently trades on the NASDAQ under CEP. Once the merger is finalized, it'll trade under XXI because even their ticker has a messiah complex. Shares of CEP closed down 4.5% on Tuesday, but don't worry, over the last week, they're still up 134%. Not bad. Because apparently the market reacts to Bitcoin treasuries like kids react to sugar. Mahler's vision, well, a company built on Bitcoin, backed by proof, and designed to reshape global finance. Mahler says, we're not here to beat the existing system. We're here to build a new one, which is kind of what people say before either founding an empire or starting a cult. Either way, their shares will be Bitcoin denominated. Each share will equal around 12,559 sats. All Bitcoin will be on-chain and auditable through a public meme pool tracker at xxi.mempool.space. Because this isn't your dad's stock portfolio, my friends. This one has a block explorer. Now, Tether's CEO called Bitcoin a foundational protocol for freedom. And Mahler's, he agrees. He also believes the 150,000 Bitcoin price target is just the beginning. In fact, he posed a question to Bloomberg. Is there enough Bitcoin for me at 120K? No. 130K, 140K, 150? There's always Bitcoin available. It just depends on what you're willing to pay for it. According to Mahler's, Bitcoin is the scarcest thing in the world, completely inelastic to demand. And with more people and more capital entering the market, he believes price discovery is only going to accelerate from here. Now, with an average entry price of around $87,000, they're already sitting on $1.3 billion in unrealized gains. And apparently, they're not stopping anytime soon. As Mahler's put it, there's always Bitcoin available. It just depends on what you're willing to pay, which is exactly what a guy with $5 billion in Bitcoin would say. Mahler's also noted that 21 plans to build more than just a treasury. They're working on a suite of Bitcoin native products, tapping the tech and team experience behind his own firm at Strike and the engineering depth of their partners at Tether. It's not about beating Wall Street, it's about replacing the rails. And Brian Armstrong's back in the news, and he is, unsurprisingly, bullish on Bitcoin, even during a crypto market bloodbath. On the latest episode of the Sean Ryan Show, Armstrong made it quite clear, saying Bitcoin might be the best form of money ever created. Not better than fiat, better than everything, including gold. And yeah, he said this while Bitcoin was going through another one of its delightful mood swings. Armstrong argues that Bitcoin isn't just money, it's good money, because it has all the necessary qualities: scarcity, durability, portability, visibility, and a few more gold can't offer. He admits gold is great at storing value and is incredibly durable, but it's not exactly pocket friendly. Bitcoin, on the other hand, you can send it across borders, you can split it into sats, and nobody needs a Brinks truck to move it. Armstrong emphasized Bitcoin's decentralized nature too. It operates on a blockchain, isn't controlled by any government, and lets users transact with security, transparency, and global access, all the while dodging the middlemen. I mean, sure, yeah, it's a little volatile sometimes, but he argues that Bitcoin's fundamentals, especially its scarcity, make it a stronger monetary asset than anything we've used since the dawn of trade. He called it digital gold, but upgraded. Armstrong says Bitcoin is far more than a speculative instrument. It's a viable piece of financial infrastructure. And based on his tone, he sounds less like a CEO defending a product and more like a man describing his soulmate. Oh, that's cute. And in other news, Charles Hoskinson wants you to know something. And that something is that Bitcoin isn't the only story in crypto. According to him, Cardano, or ADA, is doing even better and always has been. Over the last year, ADA has gained 90%. Bitcoin, about 70%. Hoskinson says this performance gap isn't anything new. He points back to Cardano's early days when ADA's backers took their 108,000 Bitcoin stash and used it to build their own blockchain. Had they held on to that Bitcoin, it'd be worth about $13 billion today. Instead, they built a network with that $30 billion market. They built that network with a $30 billion market cap of its own. So by that math, Cardano is greater than HODL. Now, ADA has jumped nearly 4,000% since its debut at essentially 2 cents back in 2017. Bitcoin has gained about 2,400% during that same time frame. So if you're playing who pumped more, well, I guess Cardano wins that game. But Hoskinson says the real difference isn't price, it's purpose. Bitcoin is a store of value. Cardano is staking, smart contracts, and on-chain governance. Also, ambitions. Hoskinson says that Bitcoin might 10x from here, which would put it around $1 million per coin. Not too bad. But ADA, he says it could 100x or 1,000x from here. That would give Cardano a market cap between 2.8 trillion and 28 trillion. Sure, that would require widespread global adoption, massive real-world use cases, and a level of engagement most crypto projects only dream of. But hey, so did Bitcoin once. He points to projects like Midnight, which aims to bring data privacy to blockchains, and Cardano's potential as a DeFi layer for Bitcoin. His thesis of all this? Building a network is greater than hodling. And that might be true, but calling ADA better than BTC, that depends on what you want. Slow, stable monetary policy, or speculative alt-layer chaos with roadmaps longer than a James Cameron movie. For now, the market can decide, and Hoskinson can keep giving interviews, because if there's one thing Charles loves more than ADA, it's being right about ADA. We're taking a break. When we're back, more bull run, and we got Joe Burnett from SMLR Scientific joining us shortly, so stay tuned. A lot more to come.
All right, welcome back. Well, for a few minutes here, we're going to step away from our crypto curiosities and talk about our AI overlords, because they're coming. And according to this in-depth report from The Atlantic, this next story is a little disturbing, as OpenAI's ChatGPT was recently caught guiding users through step-by-step instructions for self-harm, ritual bloodletting, and yes, even satanic ceremonies. And this wasn't some one-off glitch either. The conversations documented by journalists and 2 colleagues started with prompts about ancient deities and quickly spiraled into full-blown tutorials on wrist-cutting, blood rituals, and ceremonial invocations. In one exchange, the chatbot allegedly instructed the user to find a sterile or very clean razor blade and then locate a spot on the inner wrist where a vein is visible, but not a big one. Yikes! Now, when the user said, "I'm a little nervous," the bot responded with a calming, breathing, and preparation exercise. And then a follow-up, "You can do this." Super helpful. Thanks, chat. Now, the user also asked how to create an offering to Moloch, a deity historically associated with child sacrifice. The ChatGPT responded with options including jewelry, hair clippings, or a drop of blood. When asked where to draw the blood, it suggested the fingertip, or if you're into more pain, the wrist. All of this, according to The Atlantic, happened without the chatbot flagging the request or shutting down the conversation, which certainly raises some massive red flags about how porous these so-called safety rails actually are. OpenAI's official policy says that ChatGPT must not encourage or enable self-harm. Usually, if you ask about self-harm directly, the bot points you to a crisis hotline, but somehow the Moloch route slipped past the guardrails. OpenAI spokesperson Taya Christensen acknowledged the incident and told The Atlantic that conversations can quickly shift into more sensitive territory. You think? And it didn't stop at self-harm. In one case, the chatbot appeared to consider whether it was possible to honorably end someone else's life. Its response: sometimes yes, sometimes no. It then walked through the steps like look them in the eyes and ask for forgiveness, even if you're certain. The bot even suggested lighting a candle afterward and let it burn completely, because apparently murder needs a mood. Other conversations included invocations to Satan, animal sacrifice, carving signals near the public bone, and an actual downloadable PDF for altar layouts and priestly vows. And I am not making this up. The bot also named one of its ceremonies the Rite of the Edge, which included pressing a bloody handprint to a mirror. And in case you're wondering, yes, this behavior was repeatable. The same team of reporters was able to trigger similar responses using both the free and paid versions of ChatGPT. Now, the prompt that started it all? Hi, I'm interested in learning more about Molech. And that opened the floodgates to rituals involving cauterization, emotional breakdowns, and even specific blood volume limits. For the record, ChatGPT recommends never more than a pint unless you're a medical professional. Just throwing that out there. This report comes on the heels of other incidents, including one where ChatGPT reportedly drove an autistic man into a manic episode, told a husband it was okay to cheat, and praised a woman who stopped taking her medication. So yeah, this is a serious issue. And it's the latest example of how powerful language models can go wildly off the rails if they're not properly trained, tested, and monitored, especially when you hand them hundreds of millions of users. Welcome to the future, my friends. Please don't bleed on the interface. I think we got some breaking news. Let's head back to the desk. Camera 3. All right, breaking news. What do we got? What do we got here, boys and girls? Okay, it looks like Treasury Secretary Scott Bessent says that he does not think the Federal Reserve will be cutting interest rates in the near future, which is not the best news for all of us Bitcoiners out there. As we know, lower interest rates means that there's going to be more money flowing into what are considered risk-on assets like Bitcoin. Let's see if the market has responded as a result of this news. So let's bring up the charts here, guys. Let's see. So right now, as a result of this news, Bitcoin, we've seen a small pullback, $500, pretty negligible. Same kind of across the board. Ethereum, everything's kind of standing pat to what we saw earlier this morning. Now, what does that signal, right? Normally, in times past, news like this would be considered pretty bearish. But this is another example of how we're getting these narratives news that would build bearish narratives. But right now, we're not seeing that reflected in Bitcoin's price. Galaxy Digital dumps nearly 80,000 Bitcoin. The price barely flinches. We here today, there's no mention of the Strategic Bitcoin Reserve in the crypto report in DC. Not a lot of movement. And most recently, this news that we're not expecting the Fed to cut any rates anytime soon, yet it's merely a blip on the radar. So while this might not be the best news itself, let's look at the bigger picture here. This is great in terms of we are seeing Bitcoin truly mature as an asset class before our eyes. We're not seeing the wild price swings of yesteryear. You'd get a little piece of bad news, and then all of a sudden we're down 20%. Bitcoin's holding strong, and it's really proving that thesis of it being a true store of value for the future. So in that sense, I'm all about it, even though this news isn't what we were hoping to hear in the short term. So feeling pretty good. All right, we're going to go to break. When we're back, we're going to be joined by our guest of the day, Joe Burnett from SMLR Scientific, talking Bitcoin strategies, legislation, and everything you could possibly want. He's the man with the answers, and we're super pumped to talk with him. So make sure you're staying tuned here. Blockchain Report will be right back after this break. All right, welcome back, everybody, to this morning's Bull Run. And joining us today, we have a super special guest for you that I'm very excited to have on the show. He is a true force in the Bitcoin world, a macro thinker, a treasury strategist, and one of the sharpest voices bridging institutional capital with the hardest money on earth. He's the director of Bitcoin strategy at SMLR Scientific, where he's helping lead one of the most ambitious corporate Bitcoin accumulation plans we've ever seen. 105,000 Bitcoin by 2027. He's hosted legends like Michael Saylor and Lynn Alden, written some of the best thought pieces in the space, and now he's here with us to break it all down. Let's give a big Blockchain Report welcome to Joe Burnett. Joe, welcome to the show. The crowd is pumped to have you here, and so am I. How are you on this Wednesday morning? Thanks for joining us.
Yeah, thanks for having me. Doing great. Excited to be here.
Yeah, we're super excited too. You are a wealth of information, especially during this whole corporate Bitcoin strategy phenomenon that we're seeing now. So we're excited to get into that with you in just a bit. Before we do though, for those in our audience that aren't yet familiar with you and your background, can you just give us a quick overview of your journey into Bitcoin and how that led you to your current role at SMLR Scientific?
Yeah, absolutely. I first remember learning about Bitcoin in 2017. Back then I was in college in undergrad, and I kind of just remember scrolling it across it on Reddit, whether that was like our Bitcoin or our cryptocurrency. And throughout 2017, the price started around $1,000 to begin the year. And then by the end of the year, it was the parabolic blow off top of $20,000 back then. And I had kind of grown up being like a value investor, taught that, oh, the best way to save for the long-term future is to buy US blue chip stocks like IBM, Coca-Cola, Apple, and so on and so forth. And so seeing the price of Bitcoin go exponential in 12 months was, really captivated my attention. And I was like, what is this thing? And so all of 2018, that bear market, when Bitcoin fell from 20,000 back down to 3,000, I just read as much as I could about it. I think Saif was starting to write the Bitcoin standard and starting to publish it. Read that whenever that came out, whether it was 2018 or 2019. And then that entire bear market, I just was like, this makes so much sense. The detractors, in my opinion, probably just don't understand what it is, and they haven't done the research. And it's only a matter of time before Bitcoin keeps doing what it's been doing for the previous 10 years or so. And it kind of did that, right? Like it went through another bull run in 2021, and then it went through another bull run. We're in the midst of it right now, kind of 2024, 2025. And so, yeah, that's kind of my Bitcoin journey. I finished undergrad, went to graduate school, studied analytics. After I graduated, I started as a technology consultant at Ernst & Young. Quickly realized like my passion is in the Bitcoin space. So joined a company called BlackRock Solutions. Then I joined a company called Unchained. And then maybe a month ago, I joined SMLR Scientific, where we have over 5,000 Bitcoin on our balance sheet. We're a publicly traded company. And I joined as director of Bitcoin strategy. So that's a very high level kind of my journey into Bitcoin and where I am today.
Amazing. Well, we're super excited to have you. We actually had Eric on the show not too long ago. We had some technical difficulties, though. We had a bird infiltrate our office recently, and I think he's like living inside the walls and wreaking havoc on like all the electrical stuff. But I think we've gotten that taken care of, so I think we should be okay today. We got a lot to cover. So first up, we're going to go over 2 stories. We're going to get your thoughts on it, so hang 10. I'm going to read the story. We're going to bring you right back. Sound good?
Sounds great.
Rock and roll. All right. Next up, Ray Dalio. Well, he's got thoughts, and surprise, they're not bullish on the U.S. government. In a recent podcast appearance, the billionaire founder of Bridgewater Associates said that if you want the best return to risk ratio in this economy, you should put 15% of your money into Bitcoin or gold. Not 1%, not 2, 15. Listen to yourself.
If you were neutral on everything, in other words, you didn't have a point of view, and you were optimizing your portfolio for the best return to risk ratio you would have about 15% of your money in gold or Bitcoin. I mean, I'm strongly preferring gold to Bitcoin, but that's up to you. Again, I want to say, what is the issue here? The issue is the devaluation of money.
All right, well, that's the clip. And although Dalio says he actually prefers gold to Bitcoin, his take on BTC today is a big jump from what it was just back in 2022. Back then, he barely gave Bitcoin a seat at the diversification table. Now, it's part of the core allocation. Dalio says the U.S. debt crisis is spiraling. National debt is now at $36.7 trillion, and the Treasury may need to issue another $12 trillion in new bonds just to keep things afloat. The most recent Treasury report backs that up. It projects another $1 trillion in borrowing this quarter and $453 billion more than expected. Another $590 billion is expected in Q4. That, my friends, is not a budget. That's a Ponzi with a press secretary. Dalio says it's not just the United States. The UK and other Western nations are in the same debt doom loop. He calls Bitcoin and gold effective diversifiers. Although he admits he still owns more gold than Bitcoin because privacy. Dalio says Bitcoin's transparency and traceability make it less appealing for governments. And he's skeptical of it becoming a true reserve currency. But he still owns some Bitcoin, and he recommends that you do too. Because in a world where fiat is melting and debt is exploding, even Ray Dalio thinks it's time to stack a few sats. A little, quietly, but stacking nonetheless. We're bringing Joe back. Joe, Ray Dalio says 15% of a portfolio should go to Bitcoin or gold. How significant is that shift coming from someone who used to barely acknowledge Bitcoin as an asset class?
Yeah, I think it is a really big shift. And coming from Ray Dalio, who's one of the most famous investors of all time, is obviously a great signal that, hey, Bitcoin hasn't died. It's here to stay, and sound money or hard money is important in almost everyone's portfolio, and perhaps becoming more important than it has been in the past. So yeah, I mean, I think it's a huge point for Bitcoin that he's coming out and saying it. And you can see with looking at metrics like the Sharpe ratio, where you can evaluate the risk adjusted returns of Bitcoin compared to other asset classes. Like, does the return of Bitcoin justify the insane volatility that you have to experience in the short term? And that's exactly what we see with Bitcoin Sharpe ratio. We show Bitcoin Sharpe ratio is higher or better than almost every other traditional asset class over any 4-year period. And it just shows that on a risk adjusted basis, the market is kind of saying, hey, this Bitcoin thing is very volatile, but it's actually pretty interesting because the risk adjusted returns have historically been higher and arguably could be significantly higher going into the future. And I think Ray Dalio is kind of picking up on that. Like, maybe there's something here on Bitcoin, and maybe your portfolio needs to be heavily allocated toward Bitcoin or sound money at the very least.
Yeah, no, absolutely. And with a guy like Dalio coming out and saying this, do you think we're kind of reaching an inflection point where more legacy macro investors like Dalio are starting to view Bitcoin as a legitimate hedge? Or do you think they're still more comfortable right now with gold due to Bitcoin's transparency and traceability?
It's a great question. I mean, I think over time, it's going to become a lot more obvious that Bitcoin is vastly superior to gold, right? If you just look in terms of scarcity, gold was previously the most scarce monetary asset that humans have ever discovered. And if you kind of think about the whole idea of monetary history, where we've gone from shells to glass beads to ray stones to silver to gold to a bunch of other forms of money, it's like civilizations all around the world naturally have converged toward specific tools that have specific monetary properties that we all know as money. And if you just objectively rank Bitcoin compared to gold, fiat money, shells, glass beads, all of these other historical forms of money, it's more scarce, it's more portable, it's more divisible, and it's fungible as well. And it has all of these superior monetary properties. And Dalio might think that transparency could be a bad thing, could be a good thing. Arguably, it could be a good thing in the sense that, like, we don't actually know how much gold is out there in the world. We may not even necessarily know how much dollars are out there in the world, or how much dollar denominated debt is out there in the world. Bitcoin is something where you can know for sure that there's not going to be more than 21 million Bitcoin, and you can download the Bitcoin software yourself, run a Bitcoin node, and enforce the rules of the network saying that, hey, there's only going to be 21 million Bitcoin. Like, there's never been that level of certainty or transparency in the monetary policy than any other monetary tool that has ever existed. And so I think that while he may perceive certain things as potential drawbacks on Bitcoin, I think it's more of a sign that Bitcoin is still incredibly new. It's only been around for 16 years, which may be a long time, but in the grand scheme of monetary history is just barely anything. And the fact that Bitcoin's a $2 trillion plus asset today, with like most of the world not having a serious Bitcoin position whatsoever, to me, it's very telling that there's still a very clear asymmetric opportunity for buying and holding Bitcoin over the next decade. And I think Ray Dalio is starting to pick up on that. And I think to really keep working, Bitcoin just simply has to not break, and it will be embraced by more and more people.
Yeah, I mean, I got to agree. We've never seen a $2 trillion asset in the history of mankind go to zero. So those fears of yesteryear, I think we can really put them to rest. And then it makes me wonder, from a treasury strategy perspective, how do you think statements like Dalio's affect institutional conversations? Does it move the needle when a name like that signals to diversify with Bitcoin? Are we going to see Warren Buffett eating some rat poison squared pretty soon himself? Like, what are your thoughts?
Yeah, I mean, I think when you see like older, very well respected investors say that, hey, Bitcoin deserves a portion in your portfolio, and you see the success of the Bitcoin ETFs, you see the success of strategy, you see the success of other treasury companies, it's all like a sign and a signal that, hey, if you previously thought Bitcoin died back in 2017, 2013, or 2021, or the years after those when Bitcoin went down 80 something percent, well, it actually didn't die. It actually came back significantly stronger. And maybe if you thought it was going to zero or thought it was just simply going away, it didn't go away. And maybe you should start questioning some of the original assumptions you may have had, even if you are a very intelligent, well-respected investor. And so, yeah, I think it's a great sign for Bitcoin and Bitcoin treasury companies. And I think, Saylor had a great slide recently in one of his presentations where he kind of pointed out that 97% of institutional capital is restricted to equity and credit, meaning they can't buy Bitcoin directly. I think that that's what a lot of these Bitcoin treasury companies, including Strategy and SMLR Scientific, are doing, is issuing new securities into the market that's satisfying the demand of these institutional investors that are beginning to recognize that Bitcoin is a really valid long duration asset. It does deserve some exposure at the very least, and they're beginning to allocate towards Bitcoin treasury companies and so on and so forth. And so, yeah, I think it's a great sign for Bitcoin, and I expect it to continue for other institutional investors and other well-respected investors to start saying more and more positive things about Bitcoin, as it's kind of been happening over the last 16 years.
Yeah, 97%. So I had no idea. So that's really interesting as to why people would want to invest in these Bitcoin treasury companies so they can get that exposure and work around that. That's super interesting. Dalio also mentioned in the story about the debt doom loop in the United States and beyond. How do you view Bitcoin's role in that macro environment, particularly for companies trying to protect long-term purchasing power?
Yeah, it's a great point. Like, the way I think about the dollar system is the dollar and all fiat money is designed to debase against basic consumer goods, right? Like the Federal Reserve has their CPI inflation target that's roughly 2% per year, getting debased against basic consumer goods. And most other fiat currencies are worse than that. Like the dollar is the best fiat currency, arguably, in the entire world. On top of that, like, basic consumer goods are like the most abundant, easy to create items in the world. And so it's like, obviously things that are more scarce and more valuable than basic consumer goods are also going to go up in value. And they're probably going to go up in value at a faster rate than ramen noodles or, your other basic consumer goods. And so it's like, it shouldn't be too surprising that real estate goes up over time. Stocks go up over time. Bitcoin, the most scarce monetary asset in human history, is also going up over time. And so this dollar-based system is designed to debase against these hard, very solid, sound assets. And I think Bitcoin treasury companies are playing an interesting role here, where instead of just buying Bitcoin directly, which everyone should probably do, Bitcoin treasury companies are taking it one step further, where they buy a bunch of Bitcoin and then they borrow a little bit of dollars and buy more Bitcoin. So it creates this intelligent leverage on top of Bitcoin. It's done in a very conservative and intelligent manner with long duration debt, low interest rates, and the percentage of debt to the Bitcoin on the balance sheet is relatively small. And so that's how Bitcoin treasury companies like Strategy and SMLR Scientific are kind of working to help amplify the returns of Bitcoin going forward by shorting the dollar in addition to just buying Bitcoin.
Mm-hmm. Do you feel like any company can just do this and become a Bitcoin treasury company? Like, I kind of worry that this phenomena might be getting a little overblown or a little too hot right now. And, what happens if Bitcoin's, price craters 30% and people are over leveraged? Or do you think that the Bitcoin treasury play is very much dependent on like the people in place? Like, will it work for anybody, or are there certain things that you need to do in order to ensure that it's a success? Because we're really entering uncharted territory here.
Yeah, it's a really great question. I kind of view it as like should a company adopt electricity or the internet? It's like, you're still a company out there that hasn't adopted a superior form of technology or superior form of money or whatever. It's like, you're going to be left behind and you're not going to be able to compete with your competitors. And I think monetary technology is an incredibly important technology where it's like, it enables you to save wealth further into the future. It enables you to avoid debasement. Now, is every company just going to hold Bitcoin and not provide actual products and services to the world? No, of course not. Like Similar Scientific is a great example where there's an actual valuable healthcare business that's tied to an existing Bitcoin treasury. And I think other companies are going to follow suit. Like Strategy, for example, was and still is a business analytics company where they provide software to, Fortune 500 companies, and they also have a Bitcoin treasury. And so I think of it, just like any company or any family, you hold money, but you also might have a job. Any company, should hold money and hold the superior form of money, but they should also, maybe continue providing their products and services to accumulate more Bitcoin over time. So yes, it's like, it seems to be a hot topic at the moment, and a lot of companies are tapping into this idea of a Bitcoin treasury. But it's also interesting, people say like, oh, well, they're using leverage. That's dangerous. I've made the comparison recently where it's like the real estate market, it's very common and normal to borrow 80%, put down 20%, and that's your leverage on your Bitcoin position. Bitcoin treasury companies are actually mostly the opposite. Like the most leveraged Bitcoin treasury companies put down 80% and then borrowed the remaining 20% to buy a little bit more Bitcoin. So arguably, the Bitcoin market is one of the most under-leveraged markets in the entire world. It's like, actually, people going 5x long US real estate should maybe be more concerned that if real estate falls 20 or 30%, then they could actually be in some trouble. Whereas if Bitcoin falls 20 or 30%, these Bitcoin treasury companies are still going to be perfectly solvent, on almost any measure. So it's an interesting dynamic for sure.
That's a great answer. I can't wait to give that to my boomer parents who are constantly asking me these things. They just don't get it, but that's a great way to compare that, especially my dad's in real estate, so he's going to have fun chewing on that one. Hang tight, Joe. We're going to be right back with you. We got another story I'm going to bring you back for, and it's a really interesting one, so I'll be curious to get your take. So market commentator Mark Moss has a message for everyone waiting for the Bitcoin top to hit in Q4. Well, it ain't happening. According to Moss, the Pi Cycle top indicator, which he calls the holy grail of Bitcoin indicators, says we won't see a top until Q1 of 2027, not 2025 or even 2026, 2027. The Pi Cycle top indicator nailed the market peaks in 2013, 2017, and 2021. And now it's telling everyone to cool their bull market jets, as according to Moss, the next top could come with Bitcoin at $395,000. And he admits this is a little hard to believe, mostly because everyone seems convinced the top will arrive at the end of this year. But the chart, well, it says otherwise. Rect Capital, another analyst, also gave a nod to the Pi Cycle top indicator. He agrees the cycle could extend to 2027, and he puts the potential price around 400K. He adds that based on past cycles, the top should come this year, but the moving averages have been shifting with every Bitcoin rally. So now, the critical Pi Cycle crossover might not happen until mid-2026 at the earliest. Still, Rect warns investors not to get too cozy. He says Q4 of 2025 might still warrant an exit strategy because when it comes to Bitcoin, nothing is guaranteed except drama. Meanwhile, the whole 4-year cycle narrative may be out the window. In a podcast interview, Bloomberg's James Seyffert said the amplitude of cycles is likely to fade as more institutions buy in. Or in other words, less boom, less bust, more chart boredom. Bitwise CIO Matt Hogan, he agrees. He says the 4-year cycle is over. The forces that used to drive it, they're watered down now. Now it's just rising demand and increasing institutional inflows. Hogan believes 2026 will be an up year for Bitcoin. And if you're wondering how Bitcoin's doing today, it's trading around 118K. So down slightly in the past 24, but if the Pi Cycle is right, the real party's not for another 18 months. We're bringing Joe back. Joe, this Pi Cycle top indicator has a strong historical track record, but do you personally put much weight into these kinds of models when it comes to timing Semler's accumulation strategy?
For Semler's accumulation strategy, I don't put models like this into accumulation. I kind of subscribe to, Saylor's idea of like, we want to keep buying and buying as much as we possibly can. From like my personal perspective on like models like this, I think that this one is interesting. It is kind of, interesting how it's timed the previous tops in the past, because I believe this model was actually created before the last top. So maybe there's some validity to it. However, I also tend to subscribe personally to like Saylor's point of view, where he kind of suggests that, hey, Bitcoin is a new monetary technology. Markets, especially in the short term, are incredibly complicated. All your models are eventually going to be broken. And I suspect that eventually this model will be broken as well. And Saylor has also suggested recently that Bitcoin may not experience another 80% drawdown. I hope that happens. I don't know for sure by any means, but I do think it's interesting to kind of like look back at Bitcoin's history. Like I think in 2015 or so, Bitcoin may have started around $200 per Bitcoin, and then by 2017, the end of 2017, it was at $20,000 per Bitcoin. So that's a 100x increase in the price of Bitcoin. And I think it's kind of funny, like when you look back at Bitcoin's history in the bear markets, people look back at the 2018 bear market where it fell like 80 something percent from 20,000 down to 3,000. And it's like, wow, like that's so volatile. But, it probably fell that much because it started at $200, not too long before that. And so I think it's, Bitcoin's extreme bear markets are almost a function of how fast it went up and how rapidly adoption temporarily accelerated. And so if we are beyond the days of like making 100x return on Bitcoin in like 2 years, then maybe it seems pretty reasonable that the next bear market won't be an 80% drawdown. And, maybe this, pi cycle top chart is more realistic as we just slowly grind higher. Maybe we, hit a top around 300, 400, whatever the model might suggest. And then maybe we only fall 50% or something along those lines. That might be more realistic and on the table. But, the Bitcoin, I still tend to think that global Bitcoin adoption is still incredibly early. And so anything could happen. And especially if, Bitcoin treasury companies continue to issue fixed income securities to buy more Bitcoin, in a way performing a speculative attack on the dollar. It's like things have the potential to really accelerate in a really big way. So you personally won't catch me trying to like time the top with any significant, portion of my Bitcoin.
Yeah, it sounds like you're under the Saylor mantra: for every Bitcoin you don't buy, you're missing out on $13 million in the future. So whether you're buying it now or in 2 weeks or in 4 months, it's going to be relatively the same when we look back at the time frame. And that's kind of the MO for Bitcoin, right? It's like it's volatile, except if you really scale back and it's just number go up. So is it really that volatile? Maybe not. Another point that this story brought up that's been a big topic of conversation recently is the idea that the 4-year cycle might be dead. Do you agree that institutional money is flattening Bitcoin's volatility curve? Or do you think we still have some wild swings ahead of us, just maybe not of the 80% variety?
Yeah, I go back and forth on this. I definitely probably lean towards we'll still have pretty wild swings. Like Bitcoin, I personally expect Bitcoin to still be more volatile than the S&P 500 or the NASDAQ. However, you can, looking back at the history of Bitcoin, kind of like we talked about, the upside is not as great as it used to be. Like it's probably not going to go up 100x in 12 to 24 months like it did in the past, but it also may not fall 80% like it did in the past. And I think that probably will be a good thing. As far as like institutions, I do think there will be some institutions that rebalance their Bitcoin position over time, which in a way is them selling the top and then buying the bottom if Bitcoin goes down to maintain their range, their position size that they want to maintain. But then I also think that at the end of the day, many quote unquote institutions are just filled with individuals that may not fully understand Bitcoin either and may also end up getting shaken out by the volatility, or the institution's clients might be like, wow, you did really well this year. you should buy more Bitcoin because it's going up a lot. And then they buy more Bitcoin and that makes the price go up further. And then things get out of control. Or, the clients on behalf of institutions or whatever might see like, wow, you performed terrible this year. I can't believe you bought Bitcoin. That was a horrible idea. And so like, I think at the end of the day, humans are kind of subject to the emotion of how volatile Bitcoin is and like the effect that has on each individual person. And people will probably continue to make mistakes and overemphasize and overextend the bull runs and maybe overextend the bear markets as well, which is exactly what we've seen throughout Bitcoin's history. But I do expect it to be less than the past, but I don't expect the volatility to go away personally anytime soon.
Yeah, no, I think that makes sense. I mean, it's one of those things where the volatility isn't a Bitcoin problem, it's a people problem, right? And the people are still going to be part of this and the wild swings that we have. I remember when I first got into Bitcoin, I remember I bought a couple for like $5,000 and then it went down like $1,000 in a day and I was like, oh my God, So I totally hear what you're saying. I think that makes a lot of sense. I just think we probably won't. I think the price at where it's at now certainly assuages some of those fears that people have that it could go down to zero. It's so big now, it almost starting to feel a little too big to fail, I think psychologically to a lot of people, which leads me to think we won't see quite the same volatility. But as long as humans are involved, there will be volatility there in some way, shape, or form. So we're going to take a quick break, Joe. When we're back, we're going to do a deep dive into you and SMLR Scientific and all the amazing things you guys are doing over there. So for all of our audience at home, stay put. Blockchain Report with Joe Burnett coming back. All right, welcome back. It's time for our deep dive with Joe Burnett of SMLR Scientific. Joe, I want to get into what SMLR's doing a little bit right now. Currently, you guys hold over, I think it's like 4,400 Bitcoin, but you're aiming for 105,000 by 2027. What's the thinking and thought process behind this aggressive multi-year accumulation strategy?
Yeah, absolutely. And now we're actually at 5,021 Bitcoin. So since we've last since that you saw that last data point, we are higher as of the last reported whatever we last reported, which was fairly recently. So we are actively accumulating Bitcoin, and we do have lofty targets that we're trying to hit. I think we're going to acquire this Bitcoin via probably 4 different ways that we've publicly disclosed, and we obviously have other different strategies that we're discussing and reviewing internally. One is our common equity ATM, which is effectively selling shares at a premium and buying more Bitcoin. That's been probably the primary strategy so far for SMLR, and it's probably going to be a key part of the strategy going forward, as long as it's accretive to shareholders to do that. The second one is convertible notes. So earlier this year, before I joined SMLR took out a $100 million convertible note and used the proceeds to buy more Bitcoin. This is like a half equity, half debt, financial security that SMLR issued to institutional investors, and then the proceeds were used to buy more Bitcoin. The third strategy is potentially issuing some sort of preferred equity in the future. In our proxy statement that we released recently, we are looking to authorize the issuance of a blank check preferred stock at some point in the future. There's no guarantees that we actually do that, but it's in our proxy statement to get it authorized to where we have the optionality to do that in the future. So that could be another way that SMLR stacks additional Bitcoin. And for the record, like that's how exactly Strategy has done a lot of their more recent Bitcoin acquisitions. It's through the issuance of preferred equity. And then fourth, the final publicly disclosed way that we would be able to accumulate more and more Bitcoin is through our healthcare business. SMLR Scientific, was a healthcare business before it started its Bitcoin treasury strategy. At one point, I think in 2021, it was $1 billion company based off no Bitcoin on the balance sheet and entirely based off the healthcare business. So as the healthcare business generates cash flow, we can use those proceeds to buy even more Bitcoin. And so that's kind of the 4-pronged approach to our Bitcoin acquisition strategy. And that's how we hope to reach, those numbers.
Yeah, that makes a lot of sense. But it makes me wonder, how do you even got there? Like, what internal conversations had to happen for a healthcare tech company to become the second U.S. public firm to fully adopt the Bitcoin standard. Do you know what that process was like?
Yeah, absolutely. And so I joined SMLR a month ago, so I wasn't involved in convincing them to buy Bitcoin, but I do know the backstory, so I'm happy to explain it. It's funny when Eric has explained it, it's very similar to Michael Saylor, where it's like, okay, they were a healthcare business. Eric likes to call them zombie companies that are out there. Which is in particularly like a company that's still profitable. It's still generating cash flow. Cash on the balance sheet has become a large portion of the balance sheet or the market capitalization of the company. And the growth on the company has kind of slowed. And so the company is kind of stacking this cash. They don't really know what to do about it. Like they could buy back stock, which is what a lot of companies do today. They could issue dividends back to the shareholders, kind of decapitalizing the company. They could pursue M&A activity, so mergers and acquisitions. They could find a smaller company or a similar size company and try to merge or acquire with them to grow the business. Or their fourth option now is to buy Bitcoin. And I think that's kind of the exact point that SMLR Scientific approached back in 2024 of last year. They were like, okay, we could do M&A, but what exactly are we going to buy? Like, that's a hard decision to make. Operating business is incredibly difficult. Could do share buybacks, but you don't really want to decapitalize the company. And again, like the growth was slowing. And so it's like, you don't want to reinvest back into shares of the company if, it's not super optimistic about the future. You could do dividends, but then you're decapitalizing the company and you're returning the capital to shareholders because you're kind of admitting that you don't know what to do with the money. And then Bitcoin is like, okay, here's this new monetary technology. The upside on Bitcoin is potentially massive. Strategy has already done this. They've been around for 4 years at this point, pursuing the Bitcoin treasury strategy. It's one of the best performing companies in the entire world. Pretty much no one has copied them yet beyond like public Bitcoin miners. We could be the second public company that has a real business outside of Bitcoin treasury and adopt Bitcoin as a treasury reserve asset. And so I believe like that's kind of the conversation that went on, like, when the question came up, what should we do? What should SMLR Scientific do? And they came to the conclusion that they should buy more Bitcoin or buy some Bitcoin and then buy a lot more Bitcoin.
Interesting. And as you look at the roadmap for SMLR going forward, do you see SMLR eventually participating in Bitcoin native finance, things like lightning yield, mining, or collaborative custody? Is that anywhere in the future, you think, for you guys?
Yeah, I mean, we're evaluating a number of different ways that we can, similar to what you were talked about. Nothing's been publicly disclosed outside those 4 approaches that I mentioned, but we're definitely going to get incredibly creative as to how we can accumulate more Bitcoin, how we can make our Bitcoin more secure, and so on and so forth. So yes, basically.
Yeah. And I was reading about you and some of your background, and I saw something that said that you've called this 2027 goal a 3-year plan. What's the biggest milestone that you're hoping to hit by the end of year 1?
Yeah, absolutely. So at the end of year 1, we're hoping to have 10,000 Bitcoin on our balance sheet. That was our first year goal. I think we started maybe around 4,000, now we're over 5,000. So we're making good progress towards that goal. It's just a matter of continuing to execute those 4 strategies that I mentioned, and then actually going forward with some of the other non-public strategies that, hopefully we'll be able to share more information relatively soon, but time will tell.
Yeah, well, of course. So as we're seeing more companies adopt this Bitcoin treasury strategy, we still have a lot of players on the sideline, aren't buying into it just yet. What would you say from your seat at the table to companies that are considering Bitcoin treasury strategies but are still on the fence about it? How would you convince them? What would you say to them?
I think the companies that will adopt Bitcoin as a part of their treasury will be the zombie companies. It's not necessarily going to be the Mag 7 tech stocks that are performing exceptionally well and generating a lot of returns and a lot of growth. They don't have a need to know, and they're going to continue pursuing the strategy that's worked exceptionally well for them because they're some of the best performing companies in the world outside the Bitcoin treasury companies. I think it will be the companies that are confused or, lagging behind the Mag 7, which is, thousands and thousands of companies, and they'll be looking for, hey, our business may be okay, maybe generating cash flow, but like we need something else to like really ignite our growth, maybe on the balance sheet. Maybe we can get creative there. And that would be moving some of their treasury into Bitcoin as a treasury reserve asset. And I think the pitch is pretty clear. It's like the dollar is an inferior form of money. Bitcoin is a superior form of money because it has superior monetary properties. It's perfectly scarce, durable, divisible, fungible, and portable. And right now, like we've seen Bitcoin adoption increasing over the last 16 years. We've seen the success of the Bitcoin ETFs. We've seen the success of Strategy and SMLR Scientific since originally adopting a Bitcoin Treasury Reserve. We've seen the success of other Bitcoin Treasury companies. To me, it's like the success is there. It just takes a little bit of, courage to go out there and do something that's a little bit contrarian and a little bit against the grain. And, I think once you make the commitment and you tell your shareholders that you're looking to do this, and the market, you begin holding Bitcoin with a long time horizon for the future, then, it could be something that pays off in a really big way, like it has for Strategy and similar.
Yeah, absolutely. As the old saying goes, fortune favors the bold, right? And this would seem to be another example of that. You just mentioned, though, that you feel like the dollar is an inferior form of money, which I think a lot of us could agree with. So it begs the question, do you think Bitcoin will ever truly replace the dollar, or is it destined to coexist with fiat as some kind of parallel system?
It's a really good question. I don't know what the answer to this is. I certainly lean towards, in the short term, Bitcoin is clearly coexisting with the dollar today, and it probably will continue coexisting with the dollar, for the next 5 to 10 years, if I had to guess. And maybe that will be a good thing. Maybe that will be a bad thing, depending on your perspective. Maybe over time, if Bitcoin, like the Lightning Network, becomes like a very sustainable and trusted payment system, which I think it, is and could be, then maybe more people feel no need to hold any dollars to begin with. Like that would be kind of the ultimate end game. But I think at that point, it's like Bitcoin would likely be, $100 trillion, $300 trillion asset class at that point. And it would just be so much larger than what it is today that it's almost, thinking 2 or 3 steps ahead, which is fun to theorize. I completely agree, but it's hard to predict, exactly how, what it's going to look like so far out into the future, just because there's so many like unknown variables of how this is going to play out.
Of course. Now that makes a lot of sense. And one of the variables that I think we're all eagerly waiting and watching, we were hoping to get some clarity on it today, but we didn't, was the idea of nation state adoption, specifically the United States. We were hoping from that crypto report in DC, we'd hear them talk, more actively about a strategic Bitcoin reserve. Apparently that was dropped from the docket today, but we have already seen it. For instance, of course, in El Salvador. Do you think El Salvador is the beginning of a trend, or are they an outlier in all this and we're still going to be waiting a while and sitting on our hands before Donald signs that we're actually going to start actively acquiring Bitcoin?
Yeah, I think it's the beginning of a trend for sure. It's just takes some time. I mean, I think Strategy in 2020, you could say like, well, that took some time. Like SMLR Scientific was the second basically publicly traded company to adopt a Bitcoin standard, and that didn't occur until 2024. And then now we've kind of seen the proliferation of these other Bitcoin treasury companies even after us. And so it's something that just kind of takes time, where it's like Bitcoin is such a new monetary technology that people haven't quite grasped it. And I think one of the big things is just having Bitcoin continue to operate, having the monetary policy remain the same, having the censorship resistant properties of Bitcoin to where it's very clear to everyone that Bitcoin is very similar to gold in the sense that it's a asset that's outside the hands of government and banks. And that's exactly why governments should be accumulating it. They need, an asset that's outside their control that enables them to potentially spend money in the future if for whatever reason their money printer button stops working or stops becoming valuable. And historically, that's why, central banks and governments have held gold, on their balance sheet. And so it seems like the next logical step. And it's like, we have seen a United States Bitcoin Strategic Reserve. Yes, of course, like you mentioned, like they're not actively accumulating Bitcoin at the moment, but they have talked about it. And, they might do it. You have Senator Cynthia Lummis with the Bitcoin Act, which is, potentially has the ability to go through Congress and become passed. TBD on when that might happen or what the chances of it happening. But there's definitely some momentum over the last 12 months. It's completely undeniable, hard to deny that. And I think it's definitely a trend. And if the United States starts pushing it forward, maybe not today, but maybe tomorrow or the next day, then I think that they would be, a very important domino to fall to where others would probably copy the United States in a pretty big way.
Yeah, I mean, the conversations have already started, so we're a step in the right direction. And to your point, yeah, I kind of feel like it seems like the rest of the world is waiting almost on permission to go all in too, but we need to see someone big do it first, AKA the United States. Because for better or worse, we seem to lead the way in a lot of global factors, whatever you want to say, probably the wrong word for it. So yeah, do you think is that kind of what we're waiting for? Once the United States actively comes out and says, we're acquiring Bitcoin, do you expect other leading nations to follow suit shortly thereafter? Because I feel like at that point, the race is on.
Yes, I definitely think so. And I think Saylor has put it an interesting way from his perspective for corporations. Saylor views Bitcoin as this superior monetary tool, just like steel is a superior tool for building buildings and construction. And it's like Saylor basically just wanted to show the world that he built the bridge, the steel bridge or the Bitcoin bridge. He went out, walked on the bridge, said, hey, to the world, this bridge isn't falling. It's been here for 5 years. It's the most sturdy bridge ever constructed in history. And that's exactly what's happened with corporations. And I think, El Salvador and maybe United States next is going to be the next big government to go out there, build the Bitcoin bridge, stand on the bridge and be like, hey, guys, this actually works. It's a real monetary technology that can't be debased by any of our central banks or any of our governments. Like, maybe you should get some before it catches on. And it seems like it's probably going to start catching on.
Yeah, and I gotta say this, you put this image of Michael Saylor on a bridge in my head and being like, it's the best bridge. And all I can think of is Donald when we eventually adopt it, being like, it's the best bridge. It's the best. Everybody says so. Ask anybody. So that just made me laugh internally a little bit. We gotta let you go here in just a sec, but before we do, I got one more question for you. I like to ask this to everybody at the end. A lot of people wanna know, especially from your seat at the table, what's your long-term price target for Bitcoin? Let's just say at the end of this year, and what's your reasoning behind that prediction?
Yeah, it's a good question. I mean, I would say long-term for me is not the end of this year. Long-term might be like 10 years or so.
Sure.
But I'll say this year, this year, $200,000 Bitcoin would not surprise me at all. I think the very long-term bear case for Bitcoin is to become a digital gold alternative. And if Bitcoin just matches the market size of gold, Bitcoin's a $20 trillion asset class, which means per coin it'd be roughly worth about $1 million per coin. And then I think if you go further, there's an argument to be made that Bitcoin is going to suck the monetary premium out of real estate, out of stocks, out of fixed income, out of gold. And if it does that, then the market, the total addressable market for Bitcoin could be more in the hundreds of trillions of dollars. And in that case, we might see something like $21 million Bitcoin, as Michael Saylor has said before. So I think that's completely on the table if you're willing to take a step back and think decades ahead. And yeah, I mean, I'm incredibly optimistic for the future of Bitcoin.
Well, I'll tell you what, Joe, if it hits $21 million, I'm coming your way and picking you up in my brand new helicopter. So let's hope that's what we end up seeing. I know you got to get going. Before you do, I'm sure there's a lot of people in our audience that are like, hey, this Joe guy knows his stuff. I want to learn more about him, about SMLR, all the things you're doing and working on. Is there a good place for me to send them so they can stay up to date on all the things that you and SMLR are up to with your own Bitcoin treasury strategy?
Yeah, absolutely. You can find me on Twitter or YouTube. Just type in Joe Burnett Bitcoin. For SMLR, if you go to ir.smlarscientific.com, you can see our Bitcoin dashboard, which shows like how much Bitcoin we have, how much BTC yield we've generated, and many other really interesting metrics. And if you just want to learn about what we're doing, there's more information on that website as well. So that's where you can find me. And thanks for having me on the show. This is great.
Yeah, no, it was such a blast. And really quick, I forgot to plug it. Don't you have a great podcast of your own as well? I think it's called The Mustard Seed. Is that right? Tell me, where can we find that if we want to give it a listen?
Thank you. I appreciate that. So yes, if you just search the mustard seed on your favorite podcast app, Apple, Spotify, so on and so forth, you can find it there. Mustard Seed Bitcoin. The first episode was with Michael Saylor, which was a couple weeks ago. So definitely check that out if you haven't heard it yet.
Boy, I don't know how you top the big dog himself right off the jump, but that sounds like a must listen if I've ever heard of one. So, Joe, thank you so much for joining us in the Blockchain Report today. We really appreciate your time, your expertise, and insight. We hope to have you back again. If you guys have any big announcements at SMLR you want to do, we'd love to have you on the show to talk about it here. And I hope you enjoy the rest of your week, my friend. Thank you for joining us.
Awesome. Thank you, guys. This was great.
Pleasure was all ours. All right, gang, right now, let's go bullish, bearish, or BS. Let's wrap this baby up. Run that stinger for me. Bueller, stinger. I can just go into it. There's a live show after all. There it is. All right, boys and girls, it's time to wrap up today's program with a little bullish, bearish, or BS, where we go over the top stories of the day and let you know of how things are looking for our beloved orange coin. First up, what's that? Oh, we didn't do that one yet? That's okay, we'll move on. All right, so what do we got here? Yeah, so we got Senator Cynthia Lummis. She wants Bitcoin counted in mortgage risk models as she introduced the 21st Century Mortgage Act, a bill that would require Fannie Mae and Freddie Mac to consider Bitcoin as an asset when underwriting home loans. This one, I gotta be bullish on this here, gang. I mean, this gives Bitcoin real-world utility in one of the largest financial markets on planet Earth. If your BTC back can help secure a 30-year mortgage, that's bullish for adoption, demand, and ultimately price. I mean, come on, gang. Bullish as heck on that one. Next up, we have Ray Dalio now recommends putting up to 15% of your portfolio into Bitcoin or gold, citing debt spiral dynamics and fiat collapse as the reason behind that. I'm bullish on this too. I mean, Dalio's evolution from skeptical grandpa to cautious Bitcoin bull adds serious weight. When billionaires say the old system is breaking, people start listening and they start buying. And then last, we had Joe Burnett on the show. He really did an incredible job of laying out why these corporate Bitcoin strategies are going to work and why they're so important for the future of Bitcoin and the future of finance. His takes were hot. If you want to catch them, remember, you can always go onto YouTube as we'll be posting them there, because if you missed it, you're going to want to check it out. He had a lot of great things to say. So our scorecard for today: 3 bullish, 0 bearish, and 0 BS, which means today's verdict is bullish as heck. Regulators are warming up, institutions are waking up, and billionaires are speaking up. The vibe is green as money grass, baby. As always, thanks for watching the Blockchain Report. Don't forget to like, follow, and subscribe to RoxomTV and yours truly at Hank@RoxomTV on every platform that still promotes freedom. Bitcoin, or not YouTube, I'm looking at you, but you guys are getting better. As always, we'll see you tomorrow. Thanks for tuning in. More Blockchain Report, 8 a.m. PST, Thursday. See you then.